For TraderInsight.com, I'm Adrian Manz, and this is the Around the Horn Trading Plan Wrap for the second quarter of 2011. Before we begin, I want to make sure that everyone understands that the summary being provided is for the section of the trading service labeled Around the Horn Trading Plan only and doesn't include any of the trades from the Stocks to Watch or Stocks and Sectors on the Radar portion of the trading service. If you want to see those, you can just go to TraderInsight.com/blog. And you'll see there a representation of every one of the additional trades and the profits or losses they might have had if executed exactly according to the rules of the plan. I present the data this way because the around the horn portion of the trading plan is the easiest part to replicate because the entries, the stops, the targets, all very precisely defined. Also important to note is that the results are reported in terms of points. This makes it easy to see how the strategies would affect your own trading if they were executed exactly by the rules of the plan. For instance, a return of 3 points means $3 per share. If you trade 1,000 share fixed lot size, that equals $3,000. If you divide that by the account size, you'll see what the return on account would be for various levels of account funding. So for example, if you have a $100,000 trading account, 3 points traded at 1,000 share lots would represent a 3% return. In a $50,000 account using the same parameters, the return would be 6%. In a $30,000 account, the return would be 10%, and so on. Other than that, the results should speak for themselves. Let's get started. As always, I like to take a look at the pattern distribution before I do anything else. We see here that we had 71 fastball setups, 20 infield flies, 16 line drive, 8 3-2 pitch, 3 backdoor slider, 28 switch hitter, 2 double headers, and 8 sinkers in the second quarter of 2011. Now, what I'm talking about when I say pattern distribution is the number of times each one of the patterns in Around the Horn set up, not the number of times that it actually triggered. We see in the pie chart that 2011 is still dominated by the volatility patterns. Fastball takes up a large portion of the pattern distribution. It accounts for nearly half the pie. Infield fly and line drive, also volatility patterns, account for another quarter or so of the setups, with the orderly pullback pattern switch hitter representing another major chunk of what we saw come up in my nightly analysis. Of the patterns that set up, we had 48 fastball triggers, 10 infield fly, 10 line drive, 3 3-2 pitch, 1 backdoor slider, 14 switch hitter, 2 doubleheader, and 3 sinker. Looking at a graphical representation of the triggered pattern distribution shows us that the proportions from setup to trigger have been roughly maintained, with the fastball pattern represented by just slightly more than half the pie in terms of triggered trades, and infield fly, line drive, and switch hitter triggering with just about equal frequency. In terms of overall profitability, we had 45 winners, 19 losers, 23 scratch stops, for a total of $10.09 per share, or just over 10 points for the second quarter. In terms of pattern profitability, fastball is the runaway favorite, 5.61 points for the quarter. Infield fly, 1/3 of a point. Line drive, 1.67 points. 3-2 pitch, 0.12 points. Backdoor slider, the only one negative, at minus 0.1 points. But we're not going to read too much into that since it only triggered once. Switch hitter, 2 points. Double header, 0.35 points. And sinker, 0.12 points. We see in this pie chart that we had 29 long trades and 62 short. And in terms of profitability, longs accounted for 3.8 points, whereas shorts accounted for 6.61 points. Let's just think about it all for a second. The patterns found distribution to the patterns triggered distribution looked roughly the same proportionally, as did the distribution of profits across those patterns when they actually triggered. Win-lose scratch numbers were just about in line with those we've seen in other quarters, with overall profitability down slightly, but that's pretty much par for the course going into summertime trading. Longs to shorts also ran about 2-to-1 in favor of the short side of the market, and the long to short profit distribution also ran 2-to-1 in favor of the shorts. What all of this tells me is that I'm able to follow the market as it moves through its cycles, as it's moving around the horn. That's why I want to see the difference between pattern distribution and then triggered pattern distribution. And it also tells me that I'm not digging for trades just because I like a certain pattern. Because when I look at the profitability numbers, I see that, in fact, the fastball setup, for example, which we know favors very, very volatile markets, is the one that's providing the lion's share of profits, and that's what we should be expecting if we're students of the market and following the market as it moves cyclically through its various phases. Now, let's just take a look at the Q1 and Q2 numbers together and see where we are at the halftime mark of the trading year. So far in 2011, 111 winners, 24 losers, 37 scratch stops for a gross of $35.22 per share. Profitability by pattern in this very volatile year: fastball $12.41 per share, infield flies $7.29, line drive $5.14, 3-2 pitch $2.59, backdoor slider down 20 cents a share, switch hitter $4.36 per share, double header $0.32, and sinker $8.12 per share. So the volatility patterns are really shining. Again, don't read too much into backdoor slider, because for the year, believe it or not, we've only had 3 of them. If you'd like to see how the stocks to watch and stocks and sectors on the radar setups can really add to the bottom line, I encourage you to head over to traderinsight.com/blog, where you'll see that those discretionary trades were able to take us from a 35-point per share gain to nearly 70 points per share, just about doubled the performance of the plan. For those of you who are just starting out, stay focused on those around the horn plans. For those of you who've been around for a while, take a look at the stocks to watch, take a look at the stocks and sectors on the radar, and see if you can't find some opportunity there. The Around the Horn intraday trading plan, now 8 years without a losing month, is available at traderinsight.com. All you need to do is head over to Trader Insight, click on Store, then click on Trading Plans and Services, and select Adrian Manz's Around the Horn intraday trading plan. As everybody should know, I believe in what I do. I trade the plan every single day with my own money at risk in the markets. We plan the trade, we trade the plan, and after 13 years as a professional trader, I can tell you there's nothing else I'd rather do for a living. So take a look, see what you think. If you have any questions, shoot me an email, Adrian@traderinsight.com, and I hope you have a great second half of 2011.